Good morning. Today is January the 22nd. It is a Friday. On the docket today for information getting released is PMI, which I believe we all know PMI is at 945, and then existing home sales at 10. Looks like the charts are sort of waiting for that. And now all of a sudden we've got this Baker Hughes rig count. We'll have to see if that at 1 p.m. actually does share and shed any interesting light on the horizon. I wanted to start with clean charts so we could take a look at form and not be distracted by anything much. We've got a monthly 12, a weekly 10, the daily 50, the daily 200, all sitting up here. This is a primary bounce zone. We've got to get through noise, sitting at 1890 to 1892, and then again at 1919 to 1921. Those are some pretty big moves. If we do that, this elevator shaft right here that we fell down, we should retrace into quite nicely. And then again, if all goes fairly well, we should get back up into the 1989 area, 1990 region. I believe we fall into significant trouble there. But the chart is doing what we would normally see it do. If you were looking at something on a 5-minute chart, pretend this yearly chart was a 5-minute chart, and you were looking at it and you saw the shift in momentum and you saw the SMI crossover, you would anticipate a test, a breach, and a positive retest of this 1887 to 1892 area to hold as support in order to move up in a counter trend motion into resistance against the new relative trend. And so that is really what we are going to see. Pullbacks still going to get bought, in my mind. And we've got to rise up above the 10, up above the 20, up above the 50 on the 4-hour. It is accelerating. It's a rising wedge. So that rising wedge says we should collapse under the weight of expansion to pull back into higher support. Let's take a look at our levels here. The range of motion in the ES is very similar to yesterday's range of motion in terms of size of movement. Please forgive me, folks. Allergies really giving me trouble today. All right, so what we are looking at here, we can see the breach of the 50. We can still see we're inside of the box. So the bounce off of this area, listen, it's bullish, but we know it's coming into resistance. How do we know that we are sitting at resistance? Well, one, we've been fortunate enough to see a patch of sideways activity right here for hours and hours, and they drift in momentum. Notice the color and notice the location of the SMIs. This tells us pullbacks will be bought. It's not going to be an attractive day for the person who decides they're going to short this chart at the loss of a level. It's just not going to be clean. So the prior day's high and the weekly pivot have been providing bounce zones for this chart, and it should put us up into the halfway point of the box from several days past. That is where we are. When it gets up into the 892, you're going to have to go to your super tight time frames to help you determine if the chart is going to continue with traction. That means you're going to have to see slope and aggressive momentum on the tight time frames, of which neither are present, right? What do I anticipate for the day in general? You know, obviously we're waiting on this PMI, right? Well, obviously waiting on the PMI. I would suspect that pullbacks will get bought and that range expansions that are swift will get sold. So if you're waiting for the news event, that's what I would look for. I would look for the deep retrace to be long. Yes, you'll be in the center of the box, but the range is huge. And then you just stair step your way up the space. If it expands under the current environment, it's going to sell off into a higher low. So you need to be careful about that. Let's take a look at SPY. This has been a tricky long in oil. Pulling it off 3090 in that space. It's been tricky, but still holding because I do expect a range expansion there. All right, taking a look at SPY. Look at this, popping up over the 50, the 100, the 20, the 10 on the hourly chart. Very linear motion. What is this shape? When you have a bullish form sitting in a bearish trend, that's a flag pattern, right? And that flag pattern has an expansion event. If I were to do something like draw Fibonacci here, could give me a butterfly that would send me up into this region here, 194.60. Obviously, if the SPX breaches and holds, it's going to have, you know, a good likelihood. What's ideal here? Pull back into prior congestion. It's 188, 189 area. Fairly important in the chart, but notice how much buying support you're going to have on these pullbacks. Again, sharp pullbacks going to be bought. They're going to be bought. What has the chart not done? Well, it's tested and retested every single one of these moving averages. Here's the test of the 50, and there's the retest. Here's the test of the 10, and there's the retest. Here's the test of the 20, and there's the retest. So all the retests have been accomplished on the hourly chart here. They have not been accomplished on the 4-hour chart, but with all this expansion here, I don't see this chart pulling back much below 88. Maybe 87.50, 187.50 in order to find bullish price action here. Let's load the drawing set. And we can see that 187.15 is going to be really, that's going to be a very ideal buy zone. If the chart comes down into there and you go, oh my goodness sakes, is this thing rolling over? Chances are it's not, because there's very sharp upside moving averages, sharp pullbacks will be bought. You've got to work against what your brain will normally tell you to do in environments like this, but they are bullish because they are running counter trend in a relief bounce. I think that's probably why people are going to have trouble in oil, because they expect it to resist this area. Listen, I'm going to be the most bearish person that you can possibly imagine meeting on oil. Doesn't mean I'm going to be short oil in an area where it's in the middle of a relief bounce. Indeed, I am long, taking profit right here at the start 3120 area, because it's been a region that charts have been selling. Thing is, it's going to end up holding that area, in my mind, in large part today. It's also very, very messy. Wondering if that has something to do with the Baker Hughes, but you never know. The micro ES, I talked about this yesterday. I said, hey, listen, this thing's in a rising wedge. Let's draw the Let's pull the drawings out. And what you'll notice, I said, hey, listen, this thing's going to bounce and then it's going to fail because it's breaking out of the rising wedge. And indeed, that's exactly what it's doing. Because the euro has a tendency to run relatively counter trend to the broad markets, we could anticipate from this price form that we have upside on the horizon. And it's being corroborated by this, but that's a loose correlation. So you have to be very, very careful. It's definitely not wick for wick, not size for size. What are we looking at? Shorting action. Look what's happened here. The chart has high, low, lower high, lower low, lower high. It's telegraphing at least a retest of the low. Look at what it's lost. It came in, tested all of these averages, lost them, failed. With a sharp move, we know aggressive candlesticks retrace, so we had a retest of that area, and now we should have sort of a lazy ride down. After all, they are saying that they're going to have more QE on the horizon there, and it's suspect whether we will have a QE chatter ourselves or not, so hard to say. Oh my gosh, I can barely breathe. All right, we looked at SPY. Let's take a look at the NQ. NQ action is in a bounce state, just like everything else, right? Just because I'm talking about the broad markets doesn't mean that every chart is going to look like this, though many charts do follow the same relative trend. What we have to do is if we're looking to short, we take naturally weak charts. And if we're looking to go long, we take naturally strong charts, and then we watch for aggressive moves against their trend into support or resistance so that we can take our trades. That's going to give us the highest probability event. And that's why I went long Nike on the edge of that really long, nasty day when everything looked really bad. Nike's super strong. It came into a support region and then naturally bounced off the level. So that's really what you want to do. You look at charts in aggressive trend and you work through them that way. Now, as the broad markets go, we've been in a very sharp upward trend. Like my commentary from the blog last night said, strong markets take time to retrace because buyers are so keen at pulling the chart up into new areas of resistance, or at least testing old resistance at any solid pullback into support. And in January, that failed abysmally, and it had been working for months. In January, the first week of January, it began to fail, and now we can see all the buyers here staging. This is a tweezer bottom on the daily chart, seeing all the buyers staging the area. We know we're going to slip into upside resistance in the chart. It's just a natural event. Looking forward here, we should test our resistance as we are. We should bounce out and then retrace and retest that resistance area. Do I think we get down to the bottom of the box here today? No. Do I think we break out and keep running upside? No. This chart is in general, here's a funny thing. I'm a very good analyst. I'm a very, very good analyst. And as I look at things and I go, okay, that seems very clear that it's going from here to here, there's a little part of my brain that still, even today, with as much empirical evidence as I have that shows technical analysis, good technical analysis does define trajectory events. I sit down and I say, surely who's really that we would do? I just don't know. There's always that space where you're waiting for the charts to either prove you wrong or prove you out. It's really always a house of mirrors. It really is. In this space, what we're looking at, like a number of the other things, is that rising wedge. And the rising wedge tells us expansions that are sharp are going to get sold. So we ride the expansion into the event and then watch for the pullback. Listen, if the pullback comes inside of the box, right? Let's take a look at this. If it comes inside of our trading range box, but holds the weekly pivot or holds the 50, we know the chart is going to hold that eventual level and move to the upside. 4-hour chart shows everything green here. The 1-hour chart and the 30-minute chart do tell us that we should reject this area and pull in a nice retrace. People are going to think, oh my gosh, here we go. Chart's going to roll over, and they're going to be surprised by buyers coming in at the bottom. This is my thought anyway, because momentum is telling me that even if I pull back, I am going to find buyers in the mix, and it's telling me that across several time frames. Makes trading very difficult unless you're laser focused on what it is that you're trying to do. Intraday cycle rotation or swing trading setup events. Really, that's the thing to do. All right, taking a look at oil. As I said, I believe that, yes, look. Love it. Okay, yes, that was me snickering there. You know what? No matter how much you trade, when you labor on a setup and you watch it fight around the region for so long, there's always a good feeling when it comes into where it's going. So let's talk about that. Let's talk about why today's price action looks bullish. Okay, first of all, we're above the 10, we're above the 20, we're above the 50. We're expanding out of the range. Resistance level 1 is right here on the horizon. Where do I think we're going? Well, if you go last week to the blog, you'll see that I said, hey, listen, we've got positive momentum diverging from price action in the charts. And so what we should be seeing is a bounce off of these levels. Instead, we headed lower. But even as we headed lower, our price action continued to show divergent measure. And indeed, by the time we get to this wick, we are almost positive on our MACD, and our SMIs really began to inflect right after this event. So what do I surmise? Upside momentum. Pullbacks going to get bought. Could they end up being a little deeper? Somebody tweeted me this morning. They said, you think it's going to come back to 30? No, I don't. Could it come back to 30.27? Yes. It is forming a new space. And see, now the 1-hour chart doesn't really show you technically where you should be colliding with price action. If you look at the 4-hour chart, though, it really is giving you a nice clean space. Right here is another space to potentially take a little bit of profit, of course. But 3178, I think, is the range expansion that we look for here today, and maybe even 3262. That gives us tremendous congestion. It gives us a channel event that is extremely wide. And, you know, we see a fairly wide one here at 3220. So it could stop shy there, but my guess is that pullbacks are going to continue to be held. Listen, how can you trade this simply? When you get on top of the moving averages, wait for the pullback to test a moving average. Your tightest one is reasonable if you've got nice sloping MACD lines and SMIs, and then you take the long there. That's really quite simplistic, but very effective. Let's take a look at the price levels here and see what we see. Pretty big mess. 31.47 sitting right there for us. And then, of course, we can see 32.26 up above here. Look at where we are in relation to the box. This 31.60 is almost right where this chart stopped on the high, and it's this congestion area in the box from several days past. But do you actually see anything that's telling you it's going to stop there? I don't. I really don't. So any pullbacks I see here, I know should give me pressure to the upside. I'm looking at the top of the box and a little bit of range expansion in order for us to pull back. But again, the goal is up here, 32.60, 32.70 in the region. That's where I think this chart's going to traverse. That's my thought. In general, pullbacks are going to be bought. All right, let's take a look at Apple. Didn't get a chance to clean these charts up very much. Apple reporting when? Is this today? Yesterday. 26th. That's Monday. Tuesday. So where is this chart going? It looks just like the broad market. You know, a lot of people think that charts still run from a price perspective fundamentally. And wouldn't it be nice if you could actually study fundamentals and they give you the exact measure, but they don't. And that's not how markets work. We have a tendency to become very speculative in our approach once we start being involved in a stock. And so Apple is in one of those spaces right now where some people are saying, hey, you know, I don't know how this thing's going to hold over the long time. This chart's not going to see any great big blah, 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 blah. Fact of the matter is that this is a bounce zone. Got to look at it on the dailies. We can see that it's a bounce zone. It's a bounce zone into frontline resistance, at which point it should pull back into support. Yesterday, we had the breakout at 97.70. Retest never came. However, what we did get, I said, hey, listen, if it can come back into 95.75 and bounce, we've got ourselves along into that 97.70 area. And if it breaches and retests, then we have something else. Now today, we actually get that breach right there, but we're sitting right at resistance. Do we have negative divergence? Well, not really. Not the 4-hour. The hourly says that we do, and the 30-minute says that we do. So guess what? It's going to be choppy. Going to be very choppy. So what's the ideal thing to look at? Well, you know what? If it comes in to 96.98 and it bounces off that level, going to be a good idea. Hey, listen, it could come into 96.44 and fill the gap. Remember, that's going to be a gap fill. It's going to bring buyers. So you want to watch that area just to be clear about what might be happening from a gap fill perspective. Oh my gosh, there goes the chart. Hang on a second, folks. I've got to tighten the trail on the rest of this chart, my oil trade. Okay. All right. So what this is likely to do, if the chart action holds, it's likely to bounce out. And you might think to yourself, wow, that's going to run away. Look at the relative slope. Do you see this relative slope? If it breaks out here, you can take it long. The problem is it's going to go right into the frontline resistance area and turn right around and come back. Now, chances are it's going to give you a higher low, so you might still get a really good price out of that. But in the end, that's really what you want to look for. There's nothing that looks attractive about a shorting event here. Maybe the retest of 96.35 or the failure at 98.80. But the chart is still telling you it's going to pull back very likely into a higher low. Very likely. So you want to be careful there. Taking a look at Netflix. Netflix looks a little messy to me, right? It looks really messy. I have downward formations. A negative trend with a lot of hopeful people about the movement in the chart. Here's the thing. Look what it's bouncing off of. Bouncing off the 200. It's in a moving average squeeze. So here's the thing. If we can get up above 105.70, we could have a long into 109. But in order for this chart to hold real traction, we're going to have to get up above the 109.90 area and retest it in order to see the chart stay long. From a shorting perspective, it's sitting underneath these spaces. So you know if it loses 102, it's probably got pretty good downside action on it. And if it fails that 108 area on the pop up, right? Maybe it stretches into that 50 and it can't come quite back into the space. It can be a short, but you've got to watch that 105 area for buyers to step in because they may very well take advantage of that pullback to move forward. Lovely rejection zone. Oil. Gorgeous. Watch for new support to come in here. The chart is telling us to buy the dips. All right, let's take a look at Baidu. Where's Baidu going? Resistance. Where's that resistance? About 176. So that is actually going to make a short. If it expands into that area and the momentum continues negative. Notice my lines, which are longer MACDs, and my histogram, which is a tighter MACD, telling two different stories. So this is telling me, hey, listen, if I get up into this space, I'm probably going to expand into 177.50. I've got to wait for that breach expansion and then watch the pullback and the failure of 176 to be short. Else, you know, I really can't take a short until I'm below 165.20 because there's so much momentum there. If the chart pulls back and I hold my congestion line around 168.30, I'm in good shape for the long. Also, if it comes in and it retests, it breaches and retests that 176.60, 177 area, it's also going to look very nice. Let's take a look at Tesla. A lot of people kind of bearish on Tesla right now. I think, you know, there are a lot of people who have a love-hate relationship with Elon. And, you know, that's to be expected. Anybody that rises to that kind of zenith, they're there are going to be some broken backs somewhere. In general, I'm not saying that's always the case, but certainly in general. Okay, so what are we looking at? A resistance zone. I like the 206 area to stage a rejection, but I would rather see the rejection with a little bit more negative momentum. Right now, it looks like everything is in a pullback formation that will hold the bounce. So the pullback into 201.50 is going to look nice, or the bounce up and over 206.60 and the retest of that area going to give you a long short action. Not really clean until the failure of 195 or the failure of 201.50 on that retest event. Beauty. Okay, let's take a look at Yahoo. Wow, Yahoo bouncing like mad this morning. Relief bounce, certainly. My goodness. Wow. Okay, so look at what happened. Look at why this is so likely. Look at the 30-minute. Look at the hourly. Look at the 4-hour. And look at rising momentum. Right? Once you get up above these moving averages, the only next place is congestion above. And this is exactly what this chart is doing. There is some negative divergence, but momentum is still very strong. I suspect a short is going to be at the failure to breach 30.50 or the failure of 30.50, even if it expands past it, right? Where's the better long? The pullback into 29.67. That's a pretty congested region. It could come back into 29.29, but the failed area of 29.29 is probably going to deliver the short event probably into a higher low anyway, but that is a resistance zone right there. Okay, right there. Looks really, really very likely to fade at this region here. Now, could it come up here on the congestion event? Yes, but here's what's happening on this 4-hour chart. My thought is the following. Good slope. So we're moving into resistance. What should happen here on the rejection of this 30.50 level is a pullback into a higher low. And that's why I said, hey, listen, the pullback into 29.67, even if it fills the gap, 29.39, something like that, it should pop and come back into the region, maybe even expand to the north, 31.72. Look at all the traction up here at 32.32. A lot of charts are going to be part of this great big bounce that we are seeing in the ES over the last couple of days. Let's take a look at Facebook next. Facebook also bouncing. I talked about Facebook having some long events attached to it. If it could come back into the 93.60 area. And look what it did. Lost 93.60, held the area, and then bounced and took us right up into resistance. Here's the thing. I also said the breakout was at 96.50 on the retest. If we look at a pullback, you've got to look at the resistance zones that give you the opportunity to get out of your long intraday. Here, we are finally getting into this 9650 area. We're going to have to still wait for a 9650 retest or a bounce off of 9490. That might give us a fairly good run into the next line of resistance. Where is that going to be? Let's take a look at this. These guys report 27th, so that's just around the bend. Shorting, if we reject the 96 area, maybe 96.30, that is going to be a shorting area, right? I mean, we've come into 96.70 and we are pulling back. So if you get a double top formation that gives you negative divergence in that area, it is going to be a short. Otherwise, we have to wait until it loses 94 to go short there, because there's a lot of price action punching it to the north. All right, let's get back to our regular setup. Our main platform for looking at things. Bounce zone right here in oil. It looks very expanded, and I'm really looking for the bounce into a lower high here, because I really don't think we get to our 3220 area today. I think that would be very unusual if we did, though we could. Let's load our images, our drawing images on the top shelf here. There are a lot of teaching events in these morning reports. I know it's boring to go over the past. Goodness knows, I know it's boring. If you want to get good, repetition is going to be how you win here. Take a look at this. Negative divergence. A lot of support holding in this area. The buyers are going to really do everything they can to keep it up over this level. But we should have a pullback that gives us a better buying opportunity than this one right here. Due to this pullback right there, I do see that expanding. If you say, hey, listen, I'm going to go long here because I know the price expansion is coming, I'm not going to disagree with that, but I would certainly expect that my chart would roll over just a little bit and that you might be stuck in the mud there for a portion of time. A lot of selling volume in the opening spaces here. Looking at the 5-minute chart, I can see those big blue spikes sitting in the ES and the NQ. Remember, even though you see drifting negative momentum, as long as you're sitting above the moving averages and your drifting momentum is actually green, it's telling you their buyers are sitting right around there waiting to support the zones. Doesn't mean they won't collapse into deeper support, but they're sitting there. No doubt about it. Nice bounce zone at 3130. Now we've got all our drawings loaded. All right, that's our report.